Hi, I'm Ellen McElroy, and I'm joined by Susan Seabrook. We are partners at Eversheds Sutherland. We're here today in sunny Florida at our tax group's strategic planning conference. We want to talk to you a little bit about procedural considerations for companies as they think about implementing the Tax Act.
Ellen, let's talk about our procedural toolbox. We basically have 4 tools that we want to focus on.
That's right. As we're thinking about implementing the Tax Act, you'll want to think about the tools that we all know and love that are available to you.
Right.
The first tool is an accounting method change. And the benefit of an accounting method change is that you have the ability to make adjustments to closed tax years. And what I mean by that is whenever you make an accounting method change, it's implemented with a 481A adjustment, which takes into account amounts that have been incurred in earlier years. So, for example, if a taxpayer's not been on an optimal method, that is, they haven't been deducting all that are available to deduct on a particular accounting method change, they can file an accounting method change. And the Tax Act provides a unique opportunity. We're moving from a 35% rate to a 21% rate. So to the extent that an automatic accounting method change is made, and those are set out in 2017-30, though the adjustment is taken into account on the 17 return when rates are 35%, so it can be quite beneficial. A second tool is the accounting period change. And accounting period changes move the tax period from a calendar year to a fiscal year or vice versa. And we've been talking to a number of our clients about whether changes are appropriate now in light of the Tax Act. A third tool that's especially important now is the amended return. And amended returns will be important for provisions like Code Section 199 that are repealed under the Tax Act.
Yeah.
And what's important is you'll want to think about, have I taken full advantage of deductions that are available under Code Section 199 in all open years? And if I haven't, I want to file an amended return to capture those deductions.
Yeah, and I think it's important too when you look at NOLs because the carryback is disappearing. And so one of the things you think about maybe is not just an amended return, but a quickie refund. But the quickie refund also has a downside, which is the IRS does not have to proceed by deficiency procedures or erroneous refund. They can actually go back and reassess that quickie refund. So even though it does go through the review and the joint committee review if it hits the threshold of $5 million, there still is that clawback that I think can be dangerous.
And you're right, Susan. The fourth tool in the toolbox is the carryback claim, which is available for NOLs. And as you've mentioned, especially important this year as we're moving to changes under the NOL provisions. We've talked about the tools. Let's talk about some of the strategic concerns that need to be taken into account as we think about heading into controversy.
Sure. I mean, I think we saw with the conference report that the conferees were aware of the fact that companies would go into their normal tax planning process, which of course they should, but also aware of the fact that some of these tools that we think of as very plain vanilla are being used to potentially avoid the effects of the Act. So we saw our first shot across the bow recently with Rev Proc 2018-17, and that revenue procedure made pretty clear that the IRS was not, we were going to be foreclosed from making some of these normal plain vanilla changes if they had the effect of basically unwinding what should be occurring as a result of tax reform.
Susan, with the new Tax Act and the range of uncertainty that we have with the lack of guidance, what are your recommendations for items that companies need to keep front of mind as they think about implementing strategies?
Well, consistent with what we usually talk about when we talk about good tax controversy hygiene, there are really 3 things that a company needs to do. The first thing that a company needs to do is it needs to look at the statute and look at the surrounding information that it might have when there's no specific guidance to get an idea of whether there's anything else out there, any analogous position, something to hang their hat on. It should also make sure that it is transparent and it communicates this issue within its organization. Once you've figured out, is there anything out there that can lead me in one direction or another direction, you need to make the actual operational changes that would be consistent with making this change. And the third thing that you need to do is you need to make sure that you've documented your process, that you've documented steps 1, 2, and 3, and that's in your file so that you have an audit-ready file if the time comes.
Perfect. Thanks so much for taking time to listen to our video on procedural aspects of implementing the Tax Act. For additional information regarding the Tax Act, please go to our website, Eversheds Sutherland.com. Thanks so much.
Thank you.